As Steve mentioned earlier, making tax digital is going to be deferred for a year for small business owners and landlords, which is good news. And because they mentioned it, I can now go off on a tangent and talk about it. So, making tax digital, what is it? Well, it's been with us for about 2 years now. It was first announced in March 2015. And the party line is that it's a government initiative to make tax administration more effective, more efficient, and easier for taxpayers through the implementation of a fully digital tax system. So, as Steve alluded to earlier, the end of the tax return. What is it really? Well, you will get your own online digital tax account. And throughout the year, that tax account will be updated with information that the government get from other sources. So from banks, from PAYE. You'll be able to log onto that account and manage your tax affairs. So effectively look at them and make payments if you feel you need to. And at the end of the year, 10 months after the end of the tax year, you will have to log on and effectively complete a declaration saying that the amount in there is correct and the information in there is correct, which is basically, for most people, just a tax return by a different name. For some people, so landlords, business owners, partnerships, it does mean that you will have to do a quarterly report. So each quarter you'll have to log on, you'll have to update your rental income, your business income, or if you're partnership, you've got to do your partnership income. And you've got 1 month from the end of the quarter to do that. Again, so if you're in a situation where you're a small sole trader, you would have to do that on a quarterly basis. And then 10 months after the end of the year, you would have to go in and complete the declaration. So Steve suggests it's 4 tax returns. I think it's 5 tax returns a year.
Even better.
Yes. Now, for as I said, for landlords, for business owners, it's going to be worse. The details, even though we're 2 years down the line, are still pretty hazy, and there's still questions about certain things. So Steve mentioned the £10,000 exemption. Now, although this has been alluded to, it's not set in stone yet, so we're not sure what's happening there. Some of you who are sole traders will know about overlap relief, and this is basically where at the start of a trade, your profits through some quirk of taxation end up being taxed twice. And you're allowed to relieve that overlap relief when you finish trading. Now, no one knows what's going to happen there, but we're not sure how or when you will get relief for those overlap profits. Why is it happening? Well, the reason it's happening is because the government wants to reduce the tax gap. They think that by having all the information being garnered from other sources, there will be less tax going missing. There will be more, the right amount of tax will be collected. It is not to make everyone's life easier, it is simply to collect more tax. They suggest it allows flexibility, but I don't see that. The only flexibility to me that it allows you to do is to pay your tax earlier. I mean, it's just a nonsense. Who's it happening to? Well, in due course, it'll happen to everyone. Everyone that completes a self-assessment tax return will now need a Making Tax digital account. It will happen earlier than that for people with rental income, for businesses. And those are the people it's going to affect harder. It will also happen for companies. It will also affect corporation tax. Now, what does it mean for you? It means that the burden of compliance is going to get bigger. You will have to do a lot more compliance. It will have to be done instead of once a year, it will have to be done throughout the year. And that's bad news. That's bad news for everyone. It does also mean that the cost of this compliance is going to increase. So the fees that you incur in covering this compliance will go up. And again, that's not a good thing. The good thing is that we are here for you and we can help you through it. Now, those are the deadlines for people to enter into the quarterly reporting regime. So if you're a partnership, self-employed, or a landlord, and your turnover is in excess of 85,000, you will fall into the regime in April 2018. If it is between 10,000 and 85,000, and 10,000 is still something we assume, you will come into it in April 19. And you will also fall into it in April 19 if you're registered to pay VAT. And for corporation tax, it's 2020. Steve suggested I was going to go into a lot of detail on the national insurance rises, and I thank him for that because I don't really know what I can say. Class 2 national insurance continues to be abolished. They're not bringing that back. Class 4 national insurance is going to increase by 1% from April 2018. So that will be from 9% to 10%. And on amounts over 45,000, it will be from 2% to 3%. And it will increase by another 1% from April 2019. And that's about it. If you watch the budget, Philip Hammond's prelude to this announcement was quite interesting. He spent about 10 minutes talking about, and the budget was only about an hour long, so he spent about 10 minutes talking about the unfairness of the tax system and how the way that employed people and self-employed people are taxed is so unfair. And we were sitting there watching it, and we thought, well, he's going to make some sweeping announcements. We didn't know what he was going to say. It was all very exciting, and then he did this. So it was a little bit underwhelming, to be honest. What is interesting is that for the purposes of a government pledge, Class 4 national insurance is absolutely not national insurance. Steve also mentioned that I'll be talking more about the dividend allowance reduction, and he shared his disbelief at how in the space of a year this had went from being a cushion imposed to help people overcome the way that the dividends were being taxed into some horrendous loophole that director shareholders were ruthlessly exploiting. And it does point to the Orwellian society in which we live. That 12 months ago, something good is now something horrendous. The mechanics of it are that it is an allowance that gets taxed at 0%. So it doesn't work in the same way as, say, a personal allowance, which just gets lopped off your income. It does take up basic rate band. So if your basic rate band is £32,000, if you have dividends that fall within that, £2,000 of that will be taxed at 0%, and you will only have £30,000 of your basic rate band remaining.